All right, we're going to talk about one of our favorite setups here at the Lincoln List, which is the ramp trade. We got a pretty good setup here on this HOT, and I'm going to try to take a short here. It looks good, so I'm going to try to get into this first, and then I'll explain to you why something like this. I'm trying to get 400 shares here on a fill, somewhere around the 60 to 50. There we go. I think we got it. Almost. Okay. And then I'm going to go ahead and put an order in here to cover this at 68 just in case it hits while I'm talking. So for those of you who don't understand, what we're doing here is we're actually shorting the stock, which means we're betting that the stock is going to go down. Now you're going to hear a lot of things about people saying technical analysis doesn't work, chart reading is garbage, you never go against the trend. But when you trade a lot, you recognize there are patterns in stocks. And one of our favorites, as I said, is this ramp trade. So I'm going to show you how and why something like this will work and how we play this. If you first look at this stock, it was really, really strong in the morning. Got this nice little parabolic, and you see once it went to this little exhaustion move, you know, stocks do this all the time. People chase these moves. They get emotional early in the morning, and then they'll kind of come into here, and they chase these. Then they get stopped out on these stocks, and you'll see it get a nice little pullback. So this thing kind of floats up here, not floats, it kind of rips right up here to 68.20s, and then you get this nice little fade into the 67.50s, stock bases, and then it makes another strong move. The first thing that's drawing my attention to this move is one of the things I like is time versus price. Anytime you get a good balance of time and a good balance of price, you have a solid trend. When one of those comes out of whack, where you, in this case, where you get too much price over too short of time, you start to attract the emotional buyer or seller, and this is where you can take advantage of the contrarian side or small price changes in these stocks. So the first thing I'm looking at here is this move from 67.45. Hope I don't mess this chart up too bad with drawing. Up to 68.48. So you've got a dollar move here on a stock, which is not large in terms of, you know, it's a $68 stock. It's up 3%. You know, a buck move is not much, but you know, dollar move. These are 5-minute candles. You know, over a half an hour. That's a pretty solid move. You can see how it's starting to ramp up. Really, though, what's interesting me in this trade is not the fact that it's up. I'm going to minimize this chart just a little bit. If you look back the previous day, you've got some resistance, which was the high right in here. And then you have the previous day before that, the highs of 69.05, somewhere in there, 69.05. And then this high right here of 68.70. So this stock is not only making a very solid move, but it's making a move right into these resistance numbers. So there's a high chance or a very high probability that this stock will exhaust in between this little gap here, in between this. Like to go up or go down, they'll usually trade right into one area of resistance or one area of support into another area. Now, my trading style, I like to use a partial. So I'm starting out here with a 400 share, which is just an opening, like a feeler size. I need to be in the stock to kind of feel it out. I'm looking to, if we get a quick pull that comes down into this 67 or the whole number, I'll take it, as I said. But if we get up into, and it attacks this whole number, or gets against this whole number, gets in between these two, I'll look to add. Now, you could certainly wait as the trader. This is where trader discretion comes in. But I like to have a feeler in there, so I'll pay attention to it, because if I don't, there's a chance I'll get busy doing something else and I'll miss it. So as it looks now, you've got a pretty big move here. As I said, you're going right into this next resistance. And I think, you know, if we get up into, let's say, about the 67.80s or close to the 69, I'm going to look to add again, and then we'll change the target to somewhere down around to the breakout point, which is 68.30. But you can see you can see as it's pushing, you can see how it's getting more and more vertical. And what this means is, I'm not saying this is not a great buy, but what I'm saying, it's not a good buy right here, because the people who are reading the charts and they're doing the buying at the appropriate time, you're buying it down here at 67.80s, you know, when it's coming up out of this range. Once it starts to get this momentum, all of the people that are down in here are going to sell into this strength. The only people that are buying after this breakout right here are just chasers. I mean, just chasers, fat fingers, mistake trades. There's no legit buying here if you're trading on an intraday basis. Now, maybe if you're investing, you're going to buy and hold it for a while. That's different. But you still, whether you were interested in shorting stocks or not, you could still get a better execution or fill price on a stock like this because you've got too much too fast. So what we're going to do here, it's holding up pretty well. So we're going to see what it looks like. I got a feeling it's going to try to push up here a little, since you haven't had much pull in any of these candles, and pull meaning any kind of pullback or back testing here. You still got some volume coming in. We get up here a little bit further. I'm going to add to this because I'm pretty sure once you get into this resistance area up in here, that somewhere in between here, you're going to see some fatigue, especially if it goes straight. Now, if it stops right here and flags, and what I mean by flagging or consolidating or trading sideways, something like this back here in this area, trading sideways, building a pattern, building a base, then that would be completely different. This is something that would have to take a loss on and just get out of it, because then it would rest, kind of build up its strength, and then re-attack these highs, and then it would be a different scenario. The thing that makes this work is how this is bum rushing straight into that resistance, straight into these important numbers without, I'm going to go ahead and add here. There we go. All right, so now the average is 68, 63. I still got a little bit more room to add, and I'm going to put a order here. Let's go 68 30s. If we get a quick pull on this, we'll take it. And I always like to do that too, because you might catch just a quick move to the downside, and it'll pick you up. So it did pretty much what we thought it was going to do going into these two levels. But what makes this trade work, or what makes it exciting, is you get all of this emotion, you get this thing moving straight. As I said, if it stops here and it flags here or builds a base around the $0.50, which would be 68.50, if it holds that, then you would probably want to get out, especially if it started to curl back up. And what I mean by curling is if it held and then started to re-gear back up to the highs. That's different because the stock has had an opportunity to rest. In this case, it hasn't. People have just been buying. And the thing I want to point out to everyone who's watching and maybe just doesn't quite follow along, I've said before in a lot of these videos that I've had in the past, I want to reiterate it here, is stocks don't change direction or normally move just for the hell of it. There's reasons stocks pivot and move at certain points. And here, clearly, what was happening is this stock was rushing. The most important part of this lesson is it was rushing into some very important resistance levels. Now, as I said, if it would have stair-stepped or built a base or held up or something like that, it would have been a completely different story. But the fact that the stock had made such a strong move and so many green candles and so much volume to the buy side straight into a resistance, it makes it a little easier read, because the people that were buying here up into the 68, 70s, 68, 60s were straight chasing. They're not using any technical analysis at all, because they would know if they just quickly looked at the chart where resistance was, not only just on this intraday time frames here, but you also down here, the hourly I've got below. You can see this resistance takes you back a few days, so it's a pretty viable number. So we're starting to get, you can see how it rejected here a little bit, which was, I'll say was forecasted. You could see that it would probably fatigue in between these two numbers, in between the 68, 70 and 69. That doesn't take much skill to figure that out. The question is, will it pull? Will we be able to get a pretty good gain out of this, or will it just come in here, get scooped back up off of the dips, flatline, and then kind of rip? So we'll see what happens here. I'm just going to open this up just a little bit. Another thing you can see here is when you're looking at these candles, they also kind of tell you the story as well. You got not just rejection off that number, but you got pretty good rejection. You see how quickly it's starting to sell into that? It's most likely taking out these chasers. It's stopping them out, which is probably what's happening here. And I think we could get down into this last breakout. I'm going to draw another line on this chart. Hope I'm not making it messy. See if we can get about 68.30 around this last area for this breakout. You can see by the wick, this little top wick. Some people call them shadows, whatever you want to call them. It shows you how quickly that reversed. How this candle was green. It looked like it was going into the 69s, and then immediately switches real quick, like almost on a snap of your finger, and it's pulling. So we'll see if we actually get into some of those targets. And again, this is just an intraday day trade. I'm not saying that at the end of the day this stock won't end up at 72. I'm not saying that it's not a bullish stock, that it's not strong, that whatever's behind this move isn't justified. What I'm saying, and how a lot of traders make money, is by taking advantage of those who don't know when they're buying or selling, or for the reasons that they are buying or selling. In this case, you saw that emotions took over logic, where people were rushing into this stock because they were hypnotized by that green. And look, we've all done it, right? They get hypnotized by that green. They want to get into that stock because they're afraid they're going to miss the move. And they're not taking a second to look. It's at a really important area. You know, there's a good chance this thing gets rejected up here at this 69. It's too close to major resistance. So I'm going to cover this thing up here in just a second. This is a pretty good move for, I don't know, 10 minutes worth of work. So if it doesn't flush out here in a second, I'll just cover it up. Okay, I went ahead and covered there. So not bad. You know, 227 there for 10 minutes, 10, 15 minutes of work, less than that. And you can certainly, you know, the important thing is the process, because you can always increase the size. You can go in at 1,000, 2,000, whatever you're comfortable with. So just going in at 400 to show you the example of how the pattern works, how the trade works. And, you know, you find these things all day long, 10, 15 of them. They're everywhere all day long. But the important thing that I want to get back to is understanding the moves, capturing that emotion. And as I said, it's not saying that the stock won't end up going a lot higher. It's possible that will happen. But in this case, you got a lot of pressure, buying pressure straight up into a real resistance number, logical rejection zone, and it's a good way to pick up some cash. So hope you enjoyed the video. As always, feel free to visit thelincolnlist.com. Talk to you soon.